Okay, good morning, guys. Today's date is the 26th of July 2023, and I'll be looking at the financial market. I'm sorry, I've been seriously busy in the past few days and the past few weeks, and you know what I do when I'm busy, I always swing the market. So I've been trying to swing, but I usually wait for my confirmation with the market. But definitely, I still have a lot of trades running from 1,900, which is my swing trading, my long-time swing trader, my short-term swing trader, probably my day trading, or probably I don't scalp this period because I don't have time this period. I'm seriously busy. But we're going to look into gold today, and I've been saying, all of you have been hearing me saying that gold is trending perfectly well, and that's true. Gold has been trending perfectly well because if you watch my last month videos and my last 2 months videos, but before I go into the charts today, I want to let you guys know that we have a very important news today, which is the FOMC, the Fed interest rate decision, US interest rate decision around 7 p.m., which we know that the United States is also is already getting to its benchmark of increase of rates, which is giving weakness to the dollars. Are you getting it? So even today, there might just be a disruption to the upside, but structure is key. I usually tell people structure is key because America is trying to see what they can do to tighten more, even though it's just by 25 basis points, which is not a very, very hawkish, what's it called, a very, very a hawkish sign. I think to me it's still a dodgy sign because we're raising by 75 basis point or 50 basis point. It gives investors more fear to, not to buy other risk assets. But today, I'm seeing just 25 basis point forecast. So if I'm going to have just 25 basis point forecast, definitely we're still going to go. Let me use good as example. So you should know one thing that today is FOMC and anything can happen. But I usually tell people something. The market acts based on what the chart is showing. The market does what acts based on what the chart is showing. So I want to start from gold, why you should wait for interest rate decision, probably even inside that high volatility that will be happening on that period. You can also look at the structure that is happening and trade the market, find a buy, a very, very big discount buy, maybe to the downside. But according to my other videos, if you have been following my gold analysis very well, you will know that structure is key. And what structure? You can see, I was telling you how we started buying from 1,900, gotten all our conferences together. So I'll just, maybe do a rough analysis of what is happening entirely from the downside from $1,600 area. So if I can use my brush, I guess we had a triple bottom, which gave rise to, you know, the upside. So we have an uptrend, a correct uptrend, after every break of structure, we have to reverse to the downside. I guess after every break of structure, we have to reverse to the downside, which we're getting. So definitely Fibonacci retracement level has been helping us, and um, my analysis previously, the first, from the what's it called, the first change of character when we break to the upside on the higher time frame is 0.386, and the second one is 0.5 or 0.618 Q zone, like we're waiting to do for both to do as it has done for Euro USD. So the second one is 0.5, 0.618 Q zone, which perfectly sat down at our 0.5, 0.618 Q zone. So I usually call this a Q zone, that if you're seeing any switch, probably a change of character or a short pattern. I'm a market structure trader, so I use short patterns and what's it called? I use short pattern market structures to trade my market. And there are a lot of confluences I brought in. So I was just doing a rough sketch, I guess. If truly that this is a retracement, this is an impulse, and this is going to be a retracement, I want to see sluggish movement. I guess not all this move you're saying. For you to know what's it called? What's it called? For you to know an impulse, you see the momentum. And for you to know what's it called? A retracement, you see the momentum and you start seeing it slowing down. The moment you are seeing that slowing down and you see what should I call it? An exhaustion, and it's coming up, is exhausting again. You know that that market is exhausted and to continue breaking structure. So to me, I consider this a valid break of structure. I consider this a valid break of structure to be upside because it's a daily structure and we are doing a retracement. And even that retracement even gave us something very important. What is those things that it gave us? Let me bring mine. It gave us a bullish reversal sharp pattern. You know, I usually use my price action patterns. I'm a price action trader. I don't play with my bullish what's it called, my bullish and bearish chart pattern. So if I go to the hourly chart, you can see that the market gave us a perfect retracement to our Q zone, and inside our Q zone, if I bring Fibonacci in, the market perfectly came into our Q zone, and inside our Q zone, what happened inside the Q zone? It gave us a reversal chart pattern, which we started buying from. I get me. So my long swing trade, what's it called, from 1,900 from all the way from July, beginning of July, I think ending of June or beginning of the 1st of July, from 1,900 is still running because I was waiting for a reversal chart pattern, in which if I expand very well, you see that we've got the reversal chart pattern. What can you see? A head and shoulders pattern, or whatever you call it. I guess you can call it a W or a parabola. You can call it a W pattern, which is famously known by what's it called? Gold. Gold usually does only M pattern, W patterns, and which perfectly broke with this candle and with a lot of volume also. If I could put my volume indicator in volume, sorry, I have my volume. So it broke with a proper, is the volume coming in? Okay. You know, we saw volume on this break, we saw volume coming in since that time. So where are we right now? What is the market doing? I guess so. Where are we right now is a question. So if I should take this off first, you see that we are at this particular resistance, major resistance area, which was a major resistance before. So this is what you should know whenever you are trading the financial market, even though there's a fundamental. Structure is key. Since structure is key, what are you still seeing here again now? The market is doing a head and shoulders pattern. Can this complete the head and shoulders pattern and give rise to this particular trend? Because if we break above 1980, usually I wait for a break above 1980 in case you want to wait for a joker, which should take us back to our previous high. Take us back to our previous high. So in that case, you see that when we find resistance here, we started trading downward. But overall, what is the overall structure saying? That's what you need to read. In case anything wants to happen today, structure remains what key. This market was after breaking above here. So if I should bring that back, I think I should bring this particular area back, which was follow up. Don't get confused, which was support, support, support that broke and turned resistance, resistance. Now we're broken back into it again. I guess now we are trading in between this particular move. That's a particular move we are trading in between right now. Are you getting it? So how do you do your analysis? Is where you do your analysis is very important. Know your structure you are trading in before. Are you getting it? We are trading in between this particular move right now. So anything that happens internally is inside this move because we've broken back into a previous support that turned resistance, now used a reversal chart pattern, we should probably know to be W pattern and gold. Are you getting it? Reversal chart pattern, bullish reversal chart pattern broke, and we broke very well with a bullish candle, and we are in this resistance right now. So is the market going to continue? This is what we're about to find out. So if you've been following this video to this extent, even though I'm rushing, you should know one thing. What has the market been doing? That is your timestamp. What has the market, what chart patterns has the market been using to continue trend to the upside? So to me, this is a break of structure before we find resistance. So definitely this is going to be an inducement or it's going to be a demand zone. So I will, before FOMC happens today, I'll still label this part as demand zone or inducement. I guess it. What does inducement mean? Inducement means a bounce. I did not get to its target. So if I should explain inducement very well for you, what is that? Okay, this is an inducement coming back here and breaking down. Are you getting it? That's an inducement before finding a means to switch W pattern again and continue going. That's an inducement. And if it's going to be a demand, that means that if it's going to be a demand zone, and that means that it just needs to, continue to the upside, because if I should take this off, this is a valid structure. This is a valid uptrend. This is a valid uptrend. Are you getting it? This is a valid uptrend. So if I'm to not do internally, this is a valid uptrend. Are you getting it? So, but let's find out if today's FOMC is going to go against us. Is there any indication, even on a lower time frame, that caused this particular move right now? Or go to this demand zone. Was demand zone valid? Let me show you how you find out. This was your last area of value. I guess this was your last support. This was your last support. This was your resistance. Now we're broken again. So if I should expand this, what can you see at the downside? It's there. What can you see at the downside? Gold was in this resistance and it did a W pattern, a head and shoulder, inverse head and shoulders pattern again, break to the upside. So as it stands right now, this was where the entire market itself, if you're a very good packet structure trader, you know that this was what changed character to the downside, the character of gold to the downside. And we did a 0.382. First, remember, first retracement 0.382 retracement perfectly well. You would have taken this trade from 1973 all the way to probably this demand zone before finding a way to switch to the upside again. So if I should take this off, a lot of people say that my analysis is, it gets, joined into my analysis. That's because this is how I trade my market. So you should learn how I do trade my structures perfectly well before you know what to do. So, and I use this in finding out what is going to happen today after, this is the two things. Now, the difference between the upside and the downside is here. Let me show you. Now, this is how you know your previous structure and your previous break is what tells you what's going to happen in FOMC today. If we're going to continue to the upside, it's going to continue. But the moment we are breaking down, are you getting it? And closing a candle below this particular, what's it called, end and shoulder, or you can call it a W pattern. You can call it a W pattern break to the upside. W pattern break to the upside, retesting it will carry us and go. So if you're conversant with your chart patterns and you're a price action or a market structure trader, you will see this same thing at the downside. If I should bring it out, where were you at the downside? What can you see here? Except we are closing the candle below this is our chart pattern, which we closed, but we were able to crawl back. So this was what the same thing that you are seeing there right now. Break and retested, and we tried closing below, but the market was able to recover because we were in our kill zone from the downside. Remember, this whole area was our 0.5, 0.618 kill zone on the daily. So if I'm to give analysis right now, is that if I go back to daily or probably the 4-hourly chart, which I use in trending my market perfectly well, I'll show you that, I'll tell you that even when FOMC comes out today, whatever is going to happen, this market has switched to the upside being bullish. I guess it. So this market, first of all, use a falling where use a bullish continuation pattern, which also gave us a W pattern break and retest to go to the upside. But there were some gaps around here. I'm going to fill it, do an inducement and fill it before going up. That's what we're about finding out after FOMC today. So all I want to do, like I've been telling everybody since here, is that even though this escapes and does not retest properly, where I don't want to buy so that I will not get caught up in this web that is happening here right now. I guess I don't want to get caught up in that web, which I'm saying today. So FOMC can come out today because of that rise as in 25 basis points, which is a bullish sign for dollar. Make dollar rise and come down and liquidate everybody here doing an inducement back to the downside and using here as liquidity before rising. But if I'm seeing a candle, maybe probably I'm in 19, I took an entry from probably this 1968, which if I was looking at the market, I would have taken an entry upon this break. Are you getting it? So if I should go to the downside, maybe the lower time frame chart. So I was looking at this chart, probably I would have seen this W pattern or a head and shoulders pattern, whatever you can call it, break here, which I know that the target is 1968 or 1966 to 1980, which is about 120 or 140 pips to the upside, which is doing right now. I guess it's either it will continue to the upside, or because this is a previous area of there are a lot of things you consider as a market structure trader. So a lot of people say that, oh, my analysis is just true. I give all the scenarios. Very, very important. That's how I look at it. This is the difference between the upside. This is different between the upside and the downside. Are you getting it? The market continue going like this, it will break above this. Find probably, definitely, we're going to find supply orders from this whole area again in this place, and probably come back to retest this particular area, retest this one, as long as we're not breaking below this reversal chart pattern, which is a inverse head and shoulders pattern, or anybody can call it a W pattern. As long as we're not breaking below 1968, now let me use the final word now. As long as we're not breaking below 1968, are you getting it? That's if you want to take the risk of entering from the bottom instead of breaking to the upside. I'll show you why. As long as we're not breaking below 1968, we might do a dip to the downside to this area of value, no problem. But as long as we're not breaking below it and continue, you see bullish candles in these areas, and start buying, even though we're not going to break, because that's going to give rise to something called a bigger head and shoulders pattern on the daily. So if I should bring the daily out, it's going to give a bigger rise. As you can see, are you seeing green candles? But the day is not closed yet. So it's going to give a bigger rise to a very, very big head and shoulders pattern, which is head and shoulders pattern, inverse head and shoulders pattern. And if you break to the upside, you test, you can continue going. So this our internally, this is your major right now. Externally, as in majorly, this is your 1980 entry to the upside. So are we entering from now, or we are waiting after for FOMC to come and go? During this chart right now, you can see that 40 pips have come and gone. Are you getting it? Like as I was doing the chart right now, the market came back to 1970 or something like that, and it was able to go to 1973. So what is the sentiment you are using to trade the market? That's the most important thing you ask yourself. But overall, like I said, overall, the weekly, you can see that for the past how many weeks now? 4 weeks now, the market has been bullish. So have the price action, what has the price been doing from the weekly, from the monthly, what has the price been doing upon, you can see how bullish the monthly is. You can see how bullish the weekly is. 5 weeks of bullishness, and even give you a hammer on the weekly or a tweezer bottom, and you can call it, which is a bullish reversal signal on the 0.5. If you do your Fibonacci retracement after reconstruction, come down and continue going up. So there are a lot of reversal chart patterns that the market has given us, even on the daily, on the hourly chart, and it's still giving us that signal to start buying right now and put risk to it with proper risk and money management. Your what's it called? Your stop loss is supposed to be below here, not even internally. So no matter how small your capital is, you should calculate risk and money management to it, risking just 2 to 5% of your capital for this trade and just let it trend. It depends on how you want to look at your market. So no matter how FOMC is going to come today, I know that my stop loss should be below 1925 or 1920, because we are about 1973 right now. So depends. If you have been buying from all these areas, you should know that you'll be in profit, that even though it comes down, the market, even though it does that inducement internally from the 1 hourly, what's it called, time frame that we're expecting it to do today. And you can see the market is even pricing in already. It's not even waiting for FOMC, because the bullishness is there already. So market structure itself, the market might be pricing before you waiting for FOMC. So they believe that even though they want to buy, a lot of people are buying from these areas already, 1950 to 1960 area, pricing the market in already, so that in case it wants to come down during FOMC, it comes down a bit, even though to take their break even or their stop loss, they no problem. They can find re-entry from this area or put their stop loss below here and continue going in case you used a very high risk. But for me, if I'm buying any moment from here, I'm using 500 pips to the downside. Are you getting it? Because an inducement may come, but at least this is a very, very strong support because it was a previous support that was resistance, now turns support again with this large volume. So definitely it should act as a previous support before you can continue going. So are we going to do an inducement or still, consolidate in between this particular zone? Because definitely I'm looking at this zone right now until I break above. Are you getting it? We test with the volume. We test, even though I don't, as long as I'm seeing volume around this area coming in, according to that volume indicator I just showed you right now. Sometimes I'm seeing volume entering the market, probably use maybe 300 pips to the downside, 1980 to 1950, I guess into the downside, putting my stop loss here, then trend this market to 2050 back. So 1980 to 2050 is about 700 pips, while I'm risking 300 pips, 1 to 2 risk to reward ratio, very good trade. So I'll calculate my risk and money management in. But for now, the market, the structure is bullish. FOMC or no FOMC, it cannot be reduced. I guess except probably, you know what market manipulation means. Now I've said this before. The market might do an inducement to the downside, taking these early buyers off, then finding a means to find support around this area and continue going. So the two scenarios I've just given you right now is that you want to start buying, watch out for your 4-hourly structures. This is a 1-hourly structure that has broken right now and continuing to the upside. And I tell you, I don't trust my 1-hourly structures. I rather wait for my this is a 1-hourly structure, so the market might just come back here, retest, and continue going. The moment we're closing below it, and we're closing below this demand zone, are you getting that broke this last lower high? That's problem. So the market might just close below it, retest. So these are your areas of value. Even though you want to trade the lower time frame, you should know that this is an area of value. This is an area of value. This is also demand area of value. The moment we're breaking below those demand, we've broken structure. We can just come back again and switch to the downside. So watch out for your areas of value. I'm not talking too much. I don't think I'm talking too much. If you are a trader already that understands the market, you should know this, that these are not time to trade, especially the mixed feelings in the market right now because of FOMC that is happening like about 7 hours from now. There will be mixed feelings in the market. So do you want to gamble or you want to trade? If you want to trade, stay on your follow time frame. Know that if you have not entered this market from 1950 entry zone to 1968 break and retest zone, you should not enter until break above again, retest and continue going, because that will start completing the 4-hourly structures. Are you getting it? That will start completing your 4-hourly structure trend upside. So this is what I have for you. Do I have anything on Euro USD? I never wanted this video to be long, but sometimes you just have to. FOMC, let me see Euro USD. Euro USD is testing all important, previous structure. So is it going to continue going or is it going to do same inducement to the downside again? To the demand, I call that inducement. This is a demand zone. So I'm going to go deep into the demand zone, or I'm going to continue from structure. But this was a previous resistance, previous structure. So if I go to the daily, you see, I'm going to continue from here to the upside. Hold on. Demand zone. God, I don't know why my videos are so long. I want to continue from the demand zone or we're going to go to the downside. What has the market been saying? On the Farley, we are oversold already. So we are oversold already. So the market is, the RSI is moving to the upside. So I like using divergence mostly so that I will not be against me, because this is a valid demand zone. I guess it before going, why this is a structural demand zone. Overall, what I'm trying to bring up before this entire is going to the higher daily time frame, which is a higher time frame. Look at, yes, this is a break of structure. I guess it. Hold on, let me call that. This is a break of structure, which the market is supposed to, because this is another break of structure. The market did a deep retracement to 0.786 before breaking that structure to the upside again. So is the market reversing? Don't get me wrong. Follow. Is the market reversing for 0.382? That's the question you should ask yourself. What is a value break of structure? I guess not like it's just a new change of character. So is the market trying to reverse from 0.382? I guess and continue to the upside? I don't think so. I don't trade from 0.382, so I'll not take USD trade. I want the market to come to my Q zone or demand zone. Are you getting it? I want the market to come to this area before I start buying. If not, USD is not my market. Are you getting it? So is even USD, I'm afraid that the inducement will come for, because if I go to probably my 2-hour structures, you see what is happening right now, 0.382. Are you getting it? So is the market trying to do an inducement to the downside? So probably this is where I will say, okay, is this an inducement? Are you getting it? Is this an inducement zone? Inducement. I don't buy from 0.38, I only buy from 0.5 or 0.618 on my retracement. This is an inducement zone that FOMC might just come and push the market and break, induce to the downside, come into our major demand zone. It's important that you note all these things when trading. It's not just about technical analysis. Trading is not about technical analysis. Trading is bigger than just technical analysis. Yes, so is that going to be an inducement to the downside, which gold is going to do also? Are you getting it? Which GBP is going to do also? I don't care whatever is happening on the chart right now. I'm not trading until FOMC happens. Are you getting it? So is this a valid demand? Wow. GBP is trending to the upside already, because I'll show you why. My RSI, my 4-hour chart. So GBP is trending to the upside already. So let me go to my 4-hour structure to see if, hold on. Yeah, sorry. What my folly structure saying? Same thing I told you. If I bought from here, probably would have got this about 100 pips to the upside. So is GBP gonna go straight, continue the uptrend, or is gonna do an inducement also? I don't know. Let FOMC come and go. Are you getting? I'm not going to trade GBP I'm not going to trade Euro USD also. I'm just going to focus on gold. But this market is trending perfectly well, as you can see, because this is how market trends. Now, why I'm calling for inducement is because they are raising, US is raising the interest rate by 25 basis points, right? Which is supposed to bring, are you guessing, all these other assets down to the major demand zone. I don't know. So I'm just gonna wait. But I have gold telling me what it wants to do already, that this is not a zone you should be trading from in the middle. You're supposed to at least see if we're gonna come down or we're gonna break above, complete. We should complete this what's it called? We should complete these accumulation phase and send us to the next accumulation phase from 1980 to 2050. That's what you're supposed to be trading as a swing trader. That's what I do as a swing trader. So what will you do after watching this video before FOMC? It's ultimately your decision. The moment you click that button, you're either going to lose money or you're going to make money. So are you going to wait conservatively for all this I've been talking about since June 1st, before June 1st, or maybe probably since last month when we were on this, I'm looking for this particular switch to the upside? Because right now the market is bullish. First of all, breaking out from a descending triangle. I guess sorry, breaking out from a falling wedge. Are you getting it? Then also using a head and shoulders pattern, reversal chart pattern of return right now. So 1940 is a valid demand zone. Are you going to start buying from now, or you're going to use this particular demand to continue to the upside? To me, I'll tell you that wait until 9080 breaks. As long as 9080 breaks and retest, even though it's not retesting, you can enter aggressively then, because the market might have completed this accumulation phase. I guess in the market might have completed this accumulation phase it wants to do, giving rise to another trade from 1980 to 2050, 700 pips. Then you can take your maximum risk that you didn't even use in making money from this downside. I'll not say more than that. That's what I have for you today that I say I should bring to your notice. If you have any further questions, you can contact me at VisionX Limited on Telegram, on my Instagram, Janelson005, or you know how to reach me over that means. Okay, take care. Bye for now. Bye. Bye.